Hello, hello, hello. Welcome back to another review of a trade that we took on last week's Friday the 20th. As you can see, this is how the end picture looked. And that I was looking for longs. I had two trades, and that price went up very much. So let's go over how I saw this trade and how everything actually played out. So let's go to bar replay and to the opening. So there we go, it's calculating. All right, so 31 at the opening. We see that we have an opening range gap of a discount uh, gap, indicating that looking at the opening range gap itself, that we are currently in deep discounts, that we are looking for premium prices. We have a gap size of 145.25 handles, which gives us plenty of room to play around with and at least get probably like 20 handles or something like that. Um, as you can see, the NDOC and NWOC algorithms are giving me a bullish bias currently. Let's wait and see what happens, what the algorithm tells us when first presentation is created. So first presentation is created. We see that we still have a bullish bias and that everything is tradable. There is enough liquidity. The daily liquidity bias is also saying that we can trade. The weekly doesn't have a bias currently, but there's enough liquidity. And the same for pre-market London, and the finalized bias is bullish eventually. As you can see, opening range gap for value gap position, we are bullish, as I said, according to the discount gap, and we can trade. All right. So as you can see, when the first presentation was created, it immediately placed the limit order here. Seven, seven contracts. I'm sorry. Uh, and we enter. We see that where we have to do our take profits and where to go to break even. And as you see, the first trade that we took, we got stopped out, sadly. We took a pretty big hit here, like we lost $870. And in the end, you will see if we end up in the green or in the red, actually. If you were on Twitter, on X, if you follow me there, then you already know how I ended the day. So this is the first trade that we took. With the strategy that I'm currently running, I'm allowed to take two trades. You see it here, trade counter, 1 out of 2. It reaches into that new week opening gap, and it then turns around. We are remaining in that first for value gap. We close above it, and we see that we have another trade being given to us by the algorithm. We enter it. As you can see, we place a trade with one contract less. Why is that? That's due to the loss that we had. The account equity got actually taken down. And one of the rules of the 2024 mentorship is that you need to have X amount of equity to trade X amount of contracts. So due to that loss, we had to scale down a little bit. Oh. All right. So we are in the trade. We go down and up. We still remain in that fair value gap. And then we take off. We close above. We tapped the fair value gap once more. And we go up. As you can see, we hit our first target at 25%. We go to break even here. As you can see, break even stop loss pushed above our entry. And sadly, we get taken out right out of the gate here. And if we continue, you will see that from this moment on, price actually will skyrocket. So this was a very nice entry. And a good partial taken at the 75% here of the opening range gap. Why does it say that I'm exiting at 25%? That's due to the fact that the entry is placed above the 25, so I scale it up to the midpoint. And due to the fact that the midpoint is already reached, I target the next point of liquidity that hasn't been taken yet. So that's the reason why. Yeah, I got so we did make some money back, which was very nice. I was a bit sad, honestly, that we got taken out and that it then ran off. I mean, it's okay. Sometimes it happens. It is what it is. And if we leave the bar replay, you can see that when we go back towards here, turn off the indicator and show the executions, you can see that first trade that we took at first presentation, our stop loss got hit. We took a second trade and we took profits here. And then our break even got hit and we rallied up higher. I'm still happy with this trade. I mean, it was very nice. It was a bit sad to see that price wicked us out. Is what it is. We cannot do anything about it. And again, this trade was derived from the new week and new day opening gap bias from the 2024 mentorship in combination with the daily liquidity of the previous 3-day highs and lows, which indicated that we were bullish on everything. And in the end, I ended the day in minus 340. So we went from 870 to minus 340. If we did not get taken out, this trade would have, I calculated it, I would have made, like on 7 contracts, I would have made around 2 to 3K. So that was why I was a little bit bummed out. Anyway, this was the review. If you've got any questions regarding it, first and foremost, everything that you're seeing here and that my strategy of PineScript is doing is from the 2024 mentorship of ICT. If you have in-depth questions or something like that, ask ahead. Give this video a like if you like these explanations, these reviews. Even that I lost some money, but I'm still happy with it. Yeah, thank you for your time, and until next time.